Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. It's another choppy day of trade for the Indian markets. The Nifty sees resistance around the 12,000 mark. FMCG and pharma stocks are the top laggards, while the Nifty Bank outperforms. Inflows into equity mutual funds fall to their lowest level in 4 months, according to data from the Association of Mutual Funds in India. Mahindra and Mahindra, along with Eicher Motors, are trading with gains ahead of their second quarter numbers today, and both stocks are among the top Nifty gainers. And ICICI Bank is bucking the trend in today's trading session. The stock is the top point contributor to the Nifty upside. Good afternoon, Neeraj. We're actually witnessing some choppy session, resistance around the 12,000 mark, but no major losses seen at least.
Yeah, and banks to the rescue once again, Navneet. And as the headline stated as well, ICICI Bank leading that move. And look at the Bank Nifty. The Nifty is down about 0.12% or 0.2%, but the Bank Nifty is up 1.14%. And yep, if you look at the point contributors for the Nifty or the Nifty Bank as well, you will see that ICICI Bank is doing the trick right there. It's all banks, ICICI, Indus, Kotak, so private banks, not Axis really, but the others are doing well. And the flip side, we're seeing some pressures exerted by the FMCG pack, ITC, HUL and Reliance Industries marginally as well. But bring up the heat map and quickly show you what's moving on the index. Bharti Infra, UPL, Sun Pharma, clutch of names having those 2%, 2.5%, 3% kind of cuts today. TCS from amongst the heavyweights, as the thing already suggested, down about 1.5%. Bajaj Finance marginally in the red. HDFC and HDFC Bank marginally in the red. What is doing well? Yes Bank up 6%, IndusInd Bank up 4%, and ICICI Bank up 3%. Add to that a Kotak out there in the mix, and I think that pocket seems to be doing well for itself. Select auto names, the likes of Maruti, marginally in the green. But the index has its fair shares of movers, nothing too dramatic save for Yes Bank. Wonder, Devina, if the broader markets have a clutch of names which are moving on news or results.
Well, they do. So this Friday is quite action-packed in terms of individual stock-specific moves. So we'll start off first with Raymond, which I think is 20% higher this afternoon on the back of the demerger news of its businesses. So that stock doing well, 20% up. IGL on good set of numbers. Management also gave good commentary. The stock's up about 6.5%. Remember, even Gujarat Gas on similar lines did well this quarter. And DLF, the stock's been doing well, and also now with the MSCI changes, this one is in focus back again, about 7.5% higher for DLF. Other stocks in focus. Edelweiss, for one, what a run the stock has had from levels of about 75 odd. It's gone back above 110, so it's had a really stellar move. And with the shot in the arm for the real estate space, an additional kicker that's coming in for the stock, it's up about 5 odd percent. Polycap, an intraday high of 918 rupees, and this too makes its entry into the MSCI small cap index. Stocks now at about 895, but it's still a good 5% higher. And HDFC AMC also on the back of the MSCI recheck, and nonetheless this is a pocket which has a lot of interest. The stock's up about 6.5%, but makes you really think about valuations. Now the stock is at 3,200. Aside from that, losers in trade include the likes of a Bharat Forge, disappointing quarter, disappointing numbers. EBITDA was down 35%, profits were down 19%. We'll get the management to talk about the numbers in just a few moments. All Cargo Logistics and Walker too disappointed on the numbers. Volume buzzers include the likes of an RBL Bank that trades 110 times. You've got Indiabulls Real Estate, which trades 12 times, and then you've got Chambal Fertilizers, which trades 98 times its 20-day average. So those are the stocks on the back of volumes. But what else is happening with regards to the futures and options space? Navneet is highlighting that for us. Navneet.
Thanks for that, Devina. Well, more action definitely once again seen for Nifty Bank, which has witnessed a lot of OI addition as we speak, and that's for the futures, up 32% higher. And also make a point that the futures have actually slipped into discount of about 32 points versus a premium that we had seen in yesterday's closing session. So Bank Nifty futures up 1% in trade, and the Nifty Bank futures, Nifty futures will also come up on your screen, which has not seen any major addition. So there is, it's an indication, maybe an intraday basis, there is covering of position taking place because you are seeing some intraday unwinding. The premium for Nifty futures has also come off. In terms of open interest now, 12,000 will remain a key level. Both the bulls and the bears are putting up a strong fight. We did cross that mark in the intraday trade, but once again we've come off. And now, interestingly, your maximum open interest is at the 12,000 call, and even the 12,000 put has seen a lot of addition. 28 lakh shares are there in terms of on the call side, and almost 16 lakh shares are there on the put side. And we have seen more of call riding on that strike. 14 lakh shares have just been added in today's trade. Stock futures, ICICI Bank hitting once again all-time high levels. So 60% of the traded quantity has been marked for delivery so far. Last time when I checked the data on exchanges website, that's a positive sign. Futures are seeing long position. IGL reacted positively. This one too trading around its all-time high levels. 89% increase when it comes to the futures of this one, telling you that the traders are building up long positions aggressively, and even on the cash side, the volumes are on the higher side. So clearly everything going well for IGL. Bharat Forge, fresh short positions post the numbers, and the stock today has slipped below its 200-day moving average, and we have seen weakness. The commentary has not been great. We'll give you more details for that, but 28% higher when it comes to the OI build-up for Bharat Forge.
All right, Moody's has cut its India's credit growth outlook, citing a growing debt burden and slower economic growth. Let's get a view or a global voice who tracks India very closely. Andrew Freris of Ecognosis Advisory is joining us right now on the show. Andrew, thanks very much for taking out the time. Obviously, let's, when we are talking about 2017 and what Moody's did then when they actually, had a positive outlook on India. Now it looks like just some course correction that's come in. And we've seen the issues that have been playing out with regards to the growth story of India. A lot of downgrades that have come in across the board. IMF has downgraded its growth forecast. We've seen a print of about 5% in our last GDP print. Do you feel that now it's going to be something that is going to take a lot of time to unwind from here and reverse itself?
Well, let's get three things right first. First, this was the outlook change to negative. India was not downgraded. Moody's actually has rated India one notch higher than both S&P and Fitch. So even if Moody's was to actually physically downgrade India, it will be at the same level than the two other major rating authorities. So it is not tragic, neither it is final, neither it's horrible. The second point is it is of zero surprise, okay, because since the second election, since the new Modi administration, both the economy and the outlook has been slowly and steadily degrading. And I can pinpoint to certain events, not necessarily. First, of course, GDP growth is decelerating. Good, no problem. So is China, so is everybody else's. That's not a major issue. Second, economic policy measures. Well, the cash thing and the general tax on services and goods were an unmitigated disaster. One, because it was an incredibly stupid and poor policy, and the second, it was a very good policy, very poorly executed. Then the last budget we had effectively nothing. I mean, nothing, what I call sex and violence, something that would really excite the markets because it would be different, it would be new, it would be innovative. Okay, nothing of the kind. And then the third point, we have things that have been going on for years now. One is the state banking sector, and it's poor debt and poor loans issue, okay, and which is not being addressed. And then parallel to that is the shadow banking, which is intricately linked to the state banking. And this is not a matter that the financial system in India is going to collapse, far from it, but the financial system in India is not sound. And all you need is one company or one bank going down, and that could provide a seismic kind of effect, which means that given that these are state banks, the state will have to rescue them, and that will immediately put pressure on the fiscal deficit. So when I look at the fiscal deficit of India, and they told me it went from 3.4 to 3.7%, I'm just making this up, of GDP, I will tell you that's not my main concern. My main concern is off-balance sheet items that could really double it, and that is the banking system. And the banking system reform is just not being addressed. And last but not least is the fact that the Central Bank of India is not now independent. Okay, it is under the thumb of the administration. Well, take all these things together, and I'm not going to tell you we're all going to die and India is in a terrible state, but it's not, let's say, an encouraging prospect or an encouraging outlook. Sorry, I spoke a little bit too much. I apologize.
No, not at all. I'm glad you did all of that, Andrew. I really appreciate. We would have loved to chat more, Andrew, but we've just got some results on the screen, so we'll have to wrap this conversation here. But thank you so much for joining us today. That's a view from Andrew Freris of Ecognosis Advisory on the outlook rating cut. By the way, M&M numbers out on your screen, and the net profit seems to be slightly higher than estimates. Revenues at about 11,080 crores versus 11,330 crores. So those seem to be okay. I'm waiting for the margin number to come out. The expectations were that the margins would go down to 12.8%. We'll try and get that calculation going up on your screen moments from now. But considering the fact that the revenue numbers seem to be in line and the profits marginally off, I don't know if the margins have come off as well. Let's wait and watch what happens there.
Profits as per Bloomberg estimates are up 1210 crores versus 1130 crores.
Yeah, sorry, the other way around. So profits are up, but the revenues have just missed the mark marginally by 200 odd crores. Let's wait and watch what happens to those margin numbers. We should try and get them up on the screen. Remember, as I said, 12.8% anticipated from Mahindra and Mahindra this quarter, which would be a downtick from the 14.5% that they had clocked in the last time around. Let's see if price hikes help them.
Just looking at this segmental breakup, automotive and farm equipment, which the analysts track pretty closely, the revenues from both these segments on year-on-year basis and even sequentially, by the way, have seen a degrowth. So automotive has reported 7,000 crore versus 8,638, which was seen in the corresponding quarter. And even the EBIT, if you look at it, automotive segment has posted 277 crore versus 454, which was there in September quarter of last year, and 384 in June. So sequentially also there's been a big downtick. And similarly for the farm equipment segment, 701 crore is the EBIT that they've posted versus 813 in the previous.
Okay.
In the
margins are out, no need.
Yeah, what is it?
Sorry, margins are 14.1% versus 14.5%.
Ahead of estimates.
Yeah, ahead of estimates for sure, and which is why I think the results would largely go as being above estimates, because you have both the bottom line and the margin number looking okay, and the top line number looking flattish at best. So this is M&M plus MVML that I'm talking about, and those numbers seem to be better than estimated. The stock having that bit of a spike and then cooling off as well. So nothing dramatic in the price movement. I remember, I think 2 or 3 days ago, I think it was a JP Morgan note which upgraded Mahindra and Mahindra to a buy, citing that the good monsoons would probably help rural stress alleviate a bit, and maybe that would be positive for demand for these companies. So they and a couple of other brokerages have been bullish about the prospects. JPM's target price was 700. I don't know if these numbers change that outlook in any fashion, because they seem marginally ahead of estimates.
And in fact, Anand Mahindra also, when he was in Riyadh for that particular conference, he had pointed out towards the fact that there has been discounting across the board, and things have started to pick up a bit, obviously. But the outlook till when the pain lasts is something that you cannot really put a finger to. But so far, at least, even in terms of the numbers that have come out on monthly sales, as well as the reported numbers from some of the other auto OEMs, suggest that they could be on a path which was mending itself.
Yeah, let's wait and watch if that happens. Yatin Mota should be joining us any moment to talk about these numbers as well, and anything else that he's picked up. And then we should also get an analyst to talk about these numbers. It's a large index stock, about 1%, not too much in terms of a reaction, just that the numbers seem better. And the margins out there, 14.1% EBITDA margins, much higher than the anticipated margins, even though slightly lower than the 14.5% that they clocked in the corresponding quarter last year. So that's the standout.
It's coming in a tough environment as well, and we of course have the volume growth with us, which is down 21% on year-on-year basis. And of course, if you look at the breakup also that we've seen in the September quarter, tractors volume was down about 6%. Even the export volume is down about nearly 21%. So in a tough environment where of course a lot of these automotive companies have not been able to sell as much as they were selling last year in the same period, M&M has managed to maintain the margins, though there is a blip of almost 40 basis points, but it's above than what the street was expecting. Our poll was somewhere about 12.8%, and both M&M and MVML put together have given a margin of about 14.1%. The stock, however, is still sitting with some bit of gains, but no major reaction. Right now, 588.6 is where it's currently trading. And I think we've got Yatin, who is joining us with the fine print of the numbers. Yatin, major takeaways, whatever you've gathered so far?
Navneet, given the fact that the volumes on an overall basis declined in broadly double digits for the second quarter, Mahindra and Mahindra has been able to deliver on the operating performance better than the street expectations. As you were earlier mentioning, clearly the EBITDA margins is one figure that we'll watch out for. 14.1% is something that they delivered, M&M plus MVML put together, versus our expectation of 12.8%. So it's broadly a 100 crore kind of a beat as far as absolute EBITDA is concerned. Absolute EBITDA came in at 1,542 crores. It is obviously down 17% year on year, but better than the street expectations. Sales also broadly coming in line with the street expectations, and of course because of lower tax rates, the profits has been boosted. 1,355 crores is where the profit has come in versus the expectation of close to 1,128 crores. So if you look at the all-round performance, has been healthy. Of course, recently we also had JP Morgan, which has upgraded the stock of Mahindra and Mahindra. It has been under pressure, volumes have been down, but most of the brokerages like JP Morgan do believe that from here on, the valuations of the subsidiaries and the improvement in the overall operating picture, especially for the tractor segment, should make things look up for Mahindra and Mahindra.
Right, probably just not for Mahindra and Mahindra. So far, what numbers we've been seeing, Yatin, on the back of the festive season sales that have come in, does it look like things are on the mend?
If you look at the festive season sales, of course, it was a double-digit kind of a growth according to Anand Mahindra. But the challenge really is coming in for the UV segment. They haven't been able to, get substantial amount of market share. There have been new launches. The UV, is one business segment wherein they are facing some bit of headwinds. Tractors, of course, by virtue of the normal monsoon, in some places above normal monsoons, have been aiding the overall sales, but UV is one segment in the overall passenger vehicle industry which needs to be monitored in terms of the demand revival. So that is one moving piece for Mahindra and Mahindra at this point in time.
Right, Yatin, thanks very much for that. So that is Mahindra and Mahindra. So far, the stock's holding out pretty okay for itself, about 1.5% higher for
It's a forward-looking statement in the press release. They've said quarter 3 so far has started on a positive note with good deliveries, both that is in the automotive as well as the tractor segment. So it remains to be seen whether that recovery, everybody on the street has been talking about, that second half can be better than first half, whether the sales will pick up or not ahead of the BS6 implementation, which will be effective from 1st April of 2020. But some bit of a positive outlook that has come in the statement that quarter 3 has started on a positive note.
Interestingly, we'll have to also wait and watch as to how things pick up on the wholesale front, because remember, while we've been talking about a pickup on the retail side, wholesale numbers are still not picking up. I think GAIL numbers will start coming up on your screen shortly. Net income for GAIL for quarter 2, I think, is at about 1,060 crores. I don't have the comparative number. I think it's 1,460 was the estimate. So the 1,060 is what they've reported in terms of their profit numbers. Their revenues have come in at 18,040 crores. An estimate was about 18,870 crores. So just about missing those numbers, I think, a bit on the profit as well as the revenues, both of them.
Yeah, the profits seem a big miss, no, Devina? I mean, unless...
it's about 300 crores in terms of a miss that we were saying. Other income is also there, by the way. There's an inclusion of another income of about 440 crore rupees. And keeping that in mind, it's still lower on the profit side.
Yeah, so that's happened. I think the expectation on margins, and I think we have got solar industries as well. We'll just connect with the management in a bit. But because GAIL's numbers are out, just address them for a moment. The expectation on margins was 12.3%. Let's stick with that stock because I think the stock would be reacting to those adverse numbers. The expectation on margin was 12.3%. Maybe, just maybe, that would have gotten disappointed too, because as Devina said, the top line growth is largely in line, maybe 700-800 crores of a miss, but on that base. But the bottom line number is significantly off, and maybe there are some one-off anomalies, or maybe there are some margin downticks that have happened. The expectations was the margin would be 11.3%. Let's see if they've managed to clock that or no. But net income at 1,060 crores, certainly well and truly.
EBITDA would have also been impacted then, because any which ways the EBITDA on that expectation of 1288 crores was a dip of 5.5%. Now, if there is some anomaly to this or not, then that would probably even reflect in the EBITDA being much lower than the anticipated 5.5%.
There is some exceptional loss of about 1,100 crore, which they have classified as net OCI, which is not to be reclassified into the P&L account in the subsequent period. So I think that could be the figure why the bottom line has come way below what the street was expecting. The figure is some 1109. I think we'll get more details on this one.
But 1,100 crores, which means if you take a 1,060 crore profit and an 1,100 crore one-time expense, that's a big variation.
Big variation. Then I'm wondering, therefore, whether the EBITDA numbers would be what the EBITDA numbers would be, because our expectation was 2,139 crores, and if that has been met or done better than that, then maybe, just maybe, the stock would recover a bit. But let's wait and watch. Let's wait for those other numbers to come out. Optically, the numbers seem below estimates, but yeah, this one-off is pretty interesting and pretty large, and therefore difficult to quite assess what the actual impact is. But the revenues too, about 800 crores, that's about 4 or more than 5% lower than what the estimates were, right? About slightly less than 5% lower than what the estimates were. So the top line growth has also not been all that impressive. But maybe just let's wait and watch what happens. We'll get an analyst to speak about this as well. But the numbers certainly seem to be below estimates. This is the two nifty numbers, or two large numbers in the last 10 minutes of trade. Firstly, Mahindra and Mahindra, where the numbers were above estimates, and now we have GAIL, when the numbers seem to be optically below estimates, and the reactions there for everybody to see. M&M about 1.25%, and GAIL down about 4%.
All right. We'll keep it to earnings as well, and I think if we have the management of solar industries, we will try and patch that. But keeping it with what's been happening to these two Nifty 50 companies and what the kind of numbers that they've posted, I think we should try and get Somith to join in to give us a detailed insight into the breakup of GAIL's numbers and what exactly went wrong with their numbers this time around. But definitely the first few numbers that we're getting suggest that there is a big one-time loss that they have taken, despite there being another income component of also about 440 odd crores, and a big miss on the bottom line as well as the top line.
1562, Devina, and I mean, this the EBITDA number that we have 1562. That just seems to be a number that is marginally
raises alarm bells.
Yeah, well, typically these days phones do funny things, but yeah, the EBITDA number also doesn't seem to be all that great. 1562 is substantially lower than the estimates, about 2139. So this is a miss on all counts from gas.
Margins are at 8.66%. Expectation was 11.3. So that's also a big setback from 12.33 in quarter one. It was anyways a dip, 11.2, and it's actually come out at 8.66. So
I don't know if it's
segmental breakup also. Transmission has come off. The revenues have come down by about 2.5%. You've got Petrochem, which has seen an uptick, but then LPG revenues have come off by about 16%. So across the board, we're seeing some amount of pain. Energy marketing has also come down by about 2.5%. So each of the segments, have been a little bit of a drag this time around. Segmental EBIT for Petrochem is actually down 63%. LPG is down 51%. Transmission is down 4%. Wow. So across the board, there is a
has
business
actually posted
coming.
a loss for the second straight quarter. Do we have Somith with us?
No, we have Yogesh Patil of Reliance Securities with us on the phone line. Yogesh, thanks so much for joining in. It seems to be a miss across the board. Top line, EBITDA, bottom line, everything has come lower than what the Bloomberg poll suggested. What do you make of these numbers?
Yes, good afternoon. Reported numbers are below than our estimates and below the street expectations. So across segments, we have seen a fall in all the EBITDA sides. So if we look into the gas transmission are also showing a fall. Trading is also showing a fall. Petrochemical is also showing a fall. So in case of a gas trading, it was expected that because the spot LNG prices were quite lower, first of all, that might be the major reason that they have reported down in EBITDA. On the petrochemical side, the petrochemical margins were also lower. Overall petrochemical margins were lower, so that might be the second reason the petrochemical EBITDA is down. On the LPG side, if we look into the LPG cracks, so LPG cracks are down around $20 to $26 per barrel. So that might have impacted their top line. And in the LPG segment, they have continued to use the
Yogesh, if I can give you some numbers, maybe you already have that, but if I look at the segment EBIT numbers, it seems to be the marketing EBIT which has been the principal culprit, because the poll was estimating 750 crores. I think it have come in at 236 crores. That's a dramatic downtick compared to what was estimated. Why do you think this has happened? And then, of course, what's the view on the stock after these numbers?
Yeah, so first of all, the marketing EBIT numbers are down mainly because of the main culprit will be the spot LNG prices, because whatever the LNG traded by the GAIL is a contracted LNG, mostly US source Henry Hub LNG, which is at a constant fixed price, while the spot LNG prices were lower. So they might have faced a lot of pressure to sell that kind of a contracted LNG gas as compared to the lower spot LNG prices. So that's why the margins on the US LNG might be lower, and that is being reflected into the EBIT number. That is my first sense from this result. Second, on the side of going forward, now in this quarter 3Q FY20, we have seen the spot LNG prices are recovered from the lows. Nowadays, spot LNG prices are in the range of $6 per barrel. So at least in this quarter, for the quarter of 3Q and 4Q, the spot LNG prices will remain higher, because in a winter season, you will see the higher demand for the gas, and the gas prices will remain higher. So at least in 3Q and 4Q, the prices will be higher, and GAIL will not face the same kind of a pressure which they have faced in the 2Q FY20. That is my understanding on the gas trading segment or gas marketing segment.
Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us.
Okay, thanks.
And as we speak, the next set of numbers out. This is a slew of large names coming out of numbers. Eicher, guys, the net profit, 573 crores. And that stock is up about marginally.
It's above street expectations. I think for our estimates, for Eicher, profit was seen at 459. It's come in at 573. Revenues were expected to remain muted, or in fact decline by about 10% to 2,160. They've somewhat matched the revenue number at 2,190 odd crores. You've seen the tax income also, coming off for them. So this time around, the tax that they've incurred is somewhere closer to 27.8 crores versus 260 crores on a year-on-year basis. So there is a big benefit of deferred taxes that's played out in their bottom line numbers. But despite of that, you're any which way is not seeing it is a beat, but you would have anticipated a larger beat on that front. Margins were anticipated about 25.2%. So waiting to see what those margin numbers look like.
I think the bottom line is also boosted because of other income, which is higher on year-on-year basis. It's 145 crore versus 94 crore, which was there last year. In fact, in the June quarter also, it was just about 120 crore. So lower tax rate, higher other income is something I think which has contributed to the beat in terms of bottom line that we are seeing. Estimate was 459 crore, and they posted a profit figure of about 573 crore. The stock is trading in the positive territory, but no major reaction seen as of now. Oh, but yes, we have seen actually after the numbers, the stocks moved higher.
But I think adjusted for taxes, from 260 crores to 27 crores, added to that other income, then the bottom line beat should have ideally been slightly bigger.
Let's wait out for the operating performance. I guess that will be key to monitor. Now, margins, we were expecting that to contract by 500 basis points, so at 25.2, something that we were watching out for. Let's see if they put up a better show at the operating front as well.
Ankit Merchant of SMC Institutional Equities is now joining us on the phone line. Ankit, what have you made out of the first few numbers that have come out from Eicher? There's a bottom line beat, but there is a big tax benefit that they've got. There's another income component as well that has gone up from last time around.
Yeah, so I think on the operational front, the EBITDA margins have come in really well. It has come in at some 25.2%, which I believe it's a very good number to post. If you look at the other automobile companies also, they also have posted relatively better EBITDA margins than what the street has been estimating. On the top line front, again, pretty much, matching the street estimation. On the bottom line, yes, because of the tax reversal, the bottom line seems boosted up. Other income has also slightly gone up, I like to say, but not to an extent. It has gone up it has contributed close to 20 crores. So we'll have to see about how Eicher is planning to take on, once the BS6 model starts coming out, how the sales will start moving. So that's one factor which we are keenly looking at.
These margin numbers of 25.2% is something as per your calculation, Ankit?
We were relatively calculating near about 22 to 23%. It has definitely surprised us, but looking at the way other automobile companies have also come out with their margins, I think the street would be anticipating such margins.
That the numbers are looking better than what the street was expecting. We were working in an environment where volume growth for all these companies has seen a decline. Where do you think has the push come from? Has it come from Royal Enfield or from the other segment?
Certainly from the Royal Enfield segment. If you look at classic 350 sales or 350 vehicles still continue to do well. Yes, there was a certain bit of dip. And the last 2-3 months, over the last month specifically in the festive season, we have seen Royal Enfield sales actually have started going up on the ground level. So that is adding to the optimism in the street, leading to stock price from near about 16,000 it has risen up to 22,000 now.
We have seen a strong recovery. The stock had hit lows of about 15,752 in the month of September. From thereabouts now, it is trading very close to the mark of 22,000. But what is your rating on the stock, and what's the target price? Would you look to revisit, tinker with the numbers post the earnings that we've seen?
Yeah. So I don't currently have a rating on Eicher Motors. But just few things which are on our radar is one, how is BS6 prices, how the BS6 prices are going to impact Royal Enfield. That is one particular factor which we are looking at. Also, over the last 1.5 to 2 years, we have seen a lot of competition coming in the price segment which they compete. So one, Java is obviously around the corner, which has also started their deliveries. And another company called Baneli has launched a similar vehicle in the space where Royal Enfield operates at a very similar price point, offering almost a similar features. So we'd like to see how the competition is shaping up, and how BS6 is going to impact their particular production lines or on the pricing front. Because India it's quite a price sensitive market. So we have seen that during the insurance cost also, when it went up, the Royal Enfield sales had shown some negative bias.
All right, Ankit, we'll leave it at that. Thank you very much for joining us. Eicher Motors there, and we should have the management commentary coming in for both Eicher Motors and for M&M shortly. So as and when they start to address the press, we'll get you into that as well. But India's telecom industry is possibly going through its most challenging period. If an elevated debt pile was not enough, the AGR verdict of the Supreme Court is set to further dent their coffers. So, is the industry headed for a duopoly? Is there more consolidation in store? Let's pose this question to Sanjay Chawla, telecom analyst at JM Financial, on the sidelines of the JM Financial conference. Sanjay, thanks very much for taking out the time. So it's becoming really difficult, to really gauge what's been happening in the industry in terms of the fact that so far debt was the big concern, debt was the big worry. Now you've got this other whammy that they have to deal with, which is, pay those additional penalties, pay the interest on those penalties, 90,000 odd crores. How is this industry expected to come out of this?
So I think, first of all, right now the ball is in the government's court, and the choices are very stark for them, and government intervention is absolutely needed if they want to preserve a three-player market. Because I don't think a player like Vodafone Idea can absorb or bear the burden of AGR-related liability. If you look at their, balance sheet today, there's more than 1 lakh crore of debt, and the cash which is there on the balance sheet, that is enough to fund operations for the next 12 months or so. And the promoters, shareholders have already brought in a lot of capital, almost 38,000 crores in the last 18 months. So there's a lot of equity which has already gone into the company, and yet the cash which is there is sufficient only for 12 months. And then on top of that, you have this verdict from Supreme Court about definition of AGR. So clearly they are not in a position to absorb any cost on account of AGR liability, which means that some relief measures have to come from the government. Government has to probably waive off a part of the amount, if not full, and then collect that residual amount over several years, and not just charge them immediately. And these are just this is just the very few basic measures. There are a lot more measures which are needed, as I said, if the government really wants to preserve a three-player telecom market.
Wanting your sense, because when we started off this year, at that point a slew of research reports suggested that growth would be back for telecom as a space starting first quarter 2020. That visibility suddenly seems to get shaken a bit in terms of when the growth will actually start to come in for these telecom majors. What's your own sense?
So there is some growth which is coming back into the industry. I mean, if you look at the revenue profile of, let's say, Bharti, mobile revenues in India for them are no longer declining. So at least there is some stability. Now, in terms of growth, we've seen some tariff hike from Reliance Jio on account of the interconnect, the IUC charge. So they have passed on this IUC burden to customers, and there is effectively a tariff hike. But that's not a very big tariff hike. But yes, it's enough to kind of bring some growth back into the industry. But from a big picture point of view, that's simply not enough. I mean, the problem with the industry is, yes, the costs are high, be it the spectrum cost, be it the interest cost. There's just too much debt on the industry, be it the license fee and other levies. But I think the real problem for the industry right now is insufficient revenues. So even if the government were to reduce the costs for all the operators, give them some relief on the cost side, we'll basically be kicking the can down the road, because the real problem is revenue, and that has to be addressed if you're going to have three viable players over the long term. So which means it simply means the tariffs have to go up. The current tariffs are still not sustainable, despite the little bit of hike that we have seen recently. The current tariffs are simply not sustainable, and therefore that area also requires government intervention.
Yeah, well, maybe it will come soon. Sanjay, we would have loved to chat more, but Siddharth Lal of Eicher Motors just about to start speaking, so we'll have to wrap up our conversation right now. Thank you so much for being with us today on the sidelines of your conference, and have a good conference.
Thank you.
Okay, we would have loved to chat more about what to do with some of the listed incumbents, but Siddharth Lal should start speaking any moment. In fact, I think he started speaking. Let's get across.
Which is the quarter ended September 2019. And then we'll go into the business updates. Overall, we've had the revenue is down 9% from the same quarter last year to 2,192 crores. The EBITDA is down 26% for the quarter at 541 crores. And the EBITDA margin stands at 24.7% as against 30.3%. Mainly due to the volume decline of 22% year on year. So there's been a general downturn in the market for all sorts of areas, including motorcycles, and that's affected our revenue and therefore profitability. But we do have a strong profit after tax. So our profit after tax has actually risen to 573 crores for the quarter, up from 549 crores. So that's a good boost to the bottom line, actually, after all that reductions. Overall, as an update in the business, we've had the motorcycle sales have been down 22%. So that's down to 163 or 1,63,000 motorcycles. And that's overall. But within that, we've had an excellent period for exports. We've been focusing on that for many years now. We've been planting a lot of seeds across markets. That's starting to pay dividends. So in the same period, we had 4,900 motorcycle sales last year in exports, and that's up to 12,700. So 161% growth in exports. And that's also got to do with the strong response to our 650cc twins, the Interceptor, the Continental GT, and of course the Himalayan, which is continuing strong offtake in international markets. So that's on our overall sales, which is down, of course, for the quarter, but a strong boost by international markets for Royal Enfield. We continue to grow in our network. It's been a big exercise we've had over the last many years. It's paid a lot of dividends. We've added only 4 of new large format stores, so to 932 in this quarter, but we've added a whole new line of stores called studio stores. So these are smaller format stores, mostly in C, D, E class towns, which really increases our reach tremendously. In this year, we've actually already opened 500 of these stores. So in the first half, 500 stores, each one, I mean, let's say 250 in each quarter. So that's had a great initial response. We've had we're really increasing our sales through this new network. Internationally as well, we've expanded our network expansion. So we have now 57 exclusive stores across the world in 20 countries, that is, and of which 9 were added during this quarter and 15 in the first half. In addition to that, we've added a few stores in France, Thailand, Italy, Brazil. So it's really all sort of adding up in international markets. Again, dealers are getting interested because of the excellent response to the new twins and other such things. So one is the network expansion, which is continuing on track and doing really well, actually better than initially planned on the studio stores. And the second is we've had new products. We've had a new Bullet X, which has been a single channel ABS, which is new colorways and blacked out theme, which appeals, and the classic 350S, which has just come in. So the Bullet X came in a while ago, and classic has just come in with a single channel ABS, which is really spurring the market. We've improved inquiries a lot, improved walk-ins a lot. So as a result of all these activities, of course, also which has been spearheaded by Vinod Dasri, who's the new CEO of Royal Enfield, we've had actually, of course, we've had a week, few months earlier, but in October we had the best retails in any month ever for Royal Enfield, looking at our history as well. So it was an excellent festive season. I don't think we're going to repeat that immediately because the market is a bit down, but these green shoots have helped us, and that's very promising as far as we're concerned. Again, we talked about the 650 twins, which are continuing a very strong response both in India and international markets. In UK, Royal Enfield became the second largest brand in the 250 to 750. So in the middleweight category, we were the second largest brand. This is an aspiration we had for a few years out. We've already achieved that, and hopefully we can maintain that. Obviously, that's our objective. But it just shows the power of these new 650 twins that we've launched, that they're doing exceptionally well, even in developed markets, in Brazil, and on all sorts of markets. So it's we won the best retro motorcycle by MCN, which is the largest paper, let's say, in a leading publication, motorcycle publication in UK, Motorcycle News. We're also on track now for our BS6 transition. We've absolutely ahead of regulatory timelines. We've been lowering stocks of BS4, preparing for commercial production of BS6. So it's all on track, and we'll start rolling out from January 2020 of BS6 stocks, so that they're in the market fully and replace BS4 before the deadline of March 31st and April 1st. Our new plant, Vallambadigal Phase 2, is now commissioned and has started commercial production. So that's also been on track.
Okay, that's of course Siddharth Eicher Motors. We've had a slew of earnings, a slew of press conferences, and one more awaiting us. Mahindra and Mahindra will start talking at 3. In between all of that, I haven't quite looked at the markets. They've just come off a little bit, maybe. No, not really. Just about 0.38% odd. But a clutch of names doing very well for themselves. Good time to get in our experts on board. And before we touch base with our technical experts, a quick chat with Ashish Gumashta. He's the MD and CEO of Julius Baer India, joins us right now on the show. Ashish, good having you, and thanks so much for being patient with us today. Just one of those days. Neeraj here, good afternoon. What's your sense, Ashish? Except
Neeraj,
for this rating downtick that we've had overnight, the macro setup or the fundamental setup seems to be in place for optimism on India. Do you sense that as well?
Yeah, so this actually is one of the most hated bull markets in the world, if you see. All the world indices are at a lifetime high. And it's the first time we have so many investors which are left out. So I'll just give you a bit of a global context, because I think that has a lot of bearing on India. Now, our sense is, as far as the global markets go, we are still in regime 1, which is that the markets are likely to continue to do well, and you will have corrections, but that is not really a reversal of trend. So if you were to broadly see, there are 4 regimes. You have regime 1, which is a generally bull market. Then you have regime 2, where you have a risk of a global event or something going wrong. You have regime 3, where you are in the midst of a financial crisis, or you have regime 4, which is a recession. Our sense is we are in the first regime. So you will have corrections, but not being invested in the market is not acceptable. I think, as most of us are aware, the world's largest oil company, Saudi Aramco, is likely to IPO in December of 2019. And this is the first time you will own a stock, but possibly also a country by investing in the stock. So globally, we are positive. Now, if you see that and you break that down to India, we have a similar thing going on. You have a set of stocks which continue to do well. And our sense is there is no use trying to sell those or get out of those. So if you are invested in the market and your portfolio is doing well, be there. If you are not in the market, then you have the cyclicals and the structural plays where the results are coming out and giving you opportunities to invest. So like you rightly said, Neeraj, we still continue to be optimistic, both on the global scenario as well as locally.
All right. We've just got some more numbers coming out and coming back to you, Ashish. But I think Dr. Lal PathLabs reporting its numbers. A good set of numbers. I think the stock has reacted duly as well. It's moved up. Revenues have gone up by about 15% and the profits have gone up by 41.5% to come in at 80.5 crores versus 56.9 crores, and EBITDA has moved up 25% at 109 crores versus 86.8 crores. Margins have also moved up 29.8% versus 27.3%. So stocks up. It had gone down to about 1480, 1470 just a few days ago, but I think it's just propping itself back up.
And quality names continue to rise and shine. Ashish, so in this optimism that you have on the world and India, where do earnings fit in this time around? I mean, will the elusive earnings growth come back, and would that be the harbinger of better times for investors in the Indian markets?
So if you see what's happening in India, you've had interest rate cut has come in, you've had a tax rate cut which has come in. Now, you've got to see earnings in context to the prevailing interest rates. And today you have a global interest rate scenario where interest rates are close to 0 or negative. So even with lesser earnings, the multiple the companies are getting are larger. My personal assessment is that demand is there in India. What is broken is our credit system. The moment we fix the credit system, things will come back to normal. Now, will it take 3 months, 6 months, 9 months is anybody's guess. But we are very convinced that the demand is definitely there. And the moment we fix the credit thing for us, the system comes back to normal, and that in turn leads to earnings. I think in terms of capacity utilization, if you see, a lot of our companies are crossing 80% capacity utilization. And historically, we've seen that whenever capex cycle kicks in, once demand crosses, or capacity utilization crosses 80%. Yeah. So we feel next year will be definitely better than this year. But more than focusing on earnings, I think one of the things which we miss out is the cost of capital globally continues to go down. So while we keep debating P's, you've got to understand that in Europe, in US, there are 10-year bonds of leading companies which are actually now trading at negative yields.
Okay, and well, in which case, what is it that you'd be skeptical about in the current period? If everything, I mean, everything can't be hunky-dory, there has to be something that could work against. And while the trade war and the repercussions thereof is one thing, anything else that might be India-specific which one should be careful of?
So, if you see, a capital market investment is about real risk and perceived risk. Last year, your real risk was high, perceived risk was lower. Today, your perceived risk is high, your real risk is lower. So, our sense is that almost 90% of the bad news is in the price. I think it is the credit system which, for the time being, is kind of hurt. That is what we've got to focus on fixing. The faster we fix our credit system, our sense is that this quarter itself, you will have one or two of the biggest resolutions coming up. So I think what I would watch for is this credit to start flowing into the economy, and that would be the caution point for us to look at.
We'll leave it at that. It's been a pleasure chatting with you today. Thank you so much for your patience. Just one of those days wherein lots of earnings slated, so couldn't do an extensive chat, but appreciate your time. That's the MD and CEO of Julius Baer, India. Let's get in our technical experts on board to try and talk about what to do in a scenario like this. Sacchitanand Uttekar of Tradebulls, as well as Vishvesh Chauhan of ChaseAlpha with us on the show. Gentlemen, both of you, good afternoon. Thanks for joining in. Sacchitanand, a quick index strategy. Let's make it a bit of a rapid fire because M&M will start speaking in 9 minutes. What would you do on the index?
Well, Neeraj, last time when we spoke, index was at similar levels, and we talked about, a broadening formation on the 60 minutes and 30 minute scale, and I think that particular formation is still holding true. Unless we don't see a swing below 11,850, the formation may not tilt on the lower side. On the higher side, since it's a weekly close, and it is very likely that the indices may hover somewhere close to 12,000 mark. But if you look at the overall weekly trend, it has been on the positive side. So with that intention, I think it's better to retain some long bias in the market, but with a very small premium. So that's why what we have deployed is a bull call spread on the Nifty, where the expectation is that in case if the Nifty manages to sustain about 12,000 mark, there can be a very sharp directional momentum play which will be visible in the coming week. So with that intention, bull call spread on Nifty should be deployed. 12,100 calls should be bought, and one lot of 12,200 calls should be sold against it. The net premium for this particular strategy is around 15 points. That should be the stop loss for the trade. And the entire, in case if this particular momentum unfolds, then probably a swing target of around 80 to 85 points on the premium can be capitalized. So I think right now it is in the range, but the expectation is in case if we see a closing about 12,000, then there could be a very strong directional momentum play in the coming week.
Okay, that's the strategy on Nifty with the bull call spread. Hi Vishvesh, good afternoon to you. How are you approaching the trade? Clearly there is some bit of resistance at the 12,000 mark, heavy writing also coming for that strike. Are you taking any fresh bet at lower levels now?
Good afternoon. See, in my opinion, current level in the markets is pretty edgy, and not to say that the market has rallied pretty sharply in last few days. And I was on your shows, I think 3 weeks back when I recommended buy SBI around 260, and SBI is already almost 70 rupees higher from that level. My sense is that we are not going to surpass the new highs, and we have a strong reason to believe that on a higher level, the kind of selling that is going to come, that will keep the market in check. So at the current level, what Sacchitanand has recommended is a 1:1 spread. What we are recommending and what we are employing on our desk is probably creating some sort of a credit call spread, wherein what we are doing is buying at the money call and we are selling out of the money calls in a multiple of 3 to 4 ratios. My sense is that market is likely to consolidate or may go down. Very difficult to go higher above 31,500. So at this point, if you ask me, I think we have a strong reason to believe that apart from a select stocks, you can go short also. So stock specific, if I tell you, Indigo is looking good. I think beaten down name and today trying to break out. RBL Bank is looking good, can go higher. On the other hand, Oro Pharma and M&M Finance, those are the two stocks which can be short at the current levels.
Okay, so those are some stock picks also coming from Vishvesh. Sacchitanand, what about you in terms of individual stocks for this afternoon? What are you betting on?
Well, the market is presenting both the opportunities long and short. And in fact, if you look at some of the structural plays, Jubilant Food is something that has been bucking the trend. And if you look at the overall structure, there is still some positivity which is left in the counter. So we are expecting that this particular outperformance should continue in Jubilant Food. So long positions can still be deployed with a stop loss of around 1588 on the lower side. On the higher side, we are expecting that the move should unfold towards 1700 shown. So this will be on the long side. On the short side, we maintain our bias on the negative side for Ujjivan Finance. In fact, if you look at the overall structure, the structure has been weak since the stock broke down below 290 levels. Here, what we are observing is a fresh pennant on the negative side. The stop loss should be placed at around 280 and still short positions can be added. Overall, we are expecting that the price target of this particular pattern is placed somewhere close to 260, 265.
Okay. Some more stocks then to talk about. Yes Bank is up about 4%. I think it was up 6%, cooled off a bit from there. ICICI Bank's at about 490 now from 495. So that's also come off a bit. And Z is up at 289. A quick take on ICICI Bank, Sacchitanand?
Well, I think there's nothing wrong in the trend. In fact, the trend has been very strong when it comes to private banking names, and this has been a very strong outperformer. Ideally, if you look at the oscillators, it is entering an overbought zone. So definitely, some profits can be booked here. But in case if someone wants to ride on to this particular move, I think a breach below 480 would be very critical for the counter. So I think a trading stop loss mechanism should be deployed here when it comes to a stock like ICICI Bank, which has been bucking the trend. 480 would be the trailing stop for any longs which can be held up.
All right. Edelweiss is the other one on upper circuit since the last 2 days. The stock actually went down to lower levels of, I think, 70 just mid-October. And then from there now it's back up at 111. Vishvesh, do you track Edelweiss?
See, I think I do track, but at the current level, if you ask me, my sense is that markets are near a level where it is very difficult to, choose and pick. And the kind of names that I have been, saying Indigo and RBL Bank is only because of the fact that I feel that if the market goes into the consolidation phase, this stocks beaten down may give you a false feeling that the market is going to go higher, but there might be just only a short covering. So if you have to initiate some strategy at this point of time, I would say that book out on your longs, especially from a trading perspective, create some sort of a credit strategy. So even if the market slowly goes higher, you would make money. On the other hand, if it goes down, you will not lose. Try to be very, very choosy. So I'm not very gaga about the brokerage stocks like Edelweiss for that matter. But if I have to pick up something from a cash segment, probably I would wait for some sort of a decline now.
Okay, wait for some bit of decline, but the other one which is losing in trade and losing quite sharply, and that's Bharat Forge. Remember, they came out with the numbers just 2 hours back, and the numbers were weak. In fact, the management commentary was very weak. They, in fact, said the second half will be even lower than the first half, and the stock's down 8%. Sacchitanand, there is heavy shorting which is coming. The stock slipped below its mark of 200-day moving average. I'm talking about the simple DMA. Do you think at current levels it's headed for further downside, or if somebody already was holding shorts, it's time to book profits and close the position?
No, I think the way the stock has been reacting, in fact, if you look at the entire data set, its 200-day exponential moving average was placed somewhere close to 470 levels, and it was not able to surpass those levels. And the way it has filtered back, it is a clear-cut sign of a wedge breakdown on the daily scale. And I think there is some momentum which is still left in the counter. We are expecting that this move can extend right up to say 405, 408 kind of a zone. So I think a trailing stop loss should be deployed here. The stock has already witnessed a decline of almost 10% now. If you look at the entire structure, I think unless we don't have a closing above 440, I think it's ideal to retain shorts and maybe look at the entire setup somewhere close to 405.
Okay. Some stocks that you should monitor. Sterlite Tech is up about 6.5% in trade. Keep that at the back of your mind. Actually, let me not spell out too many stocks, because let's find out first what's made it to Sharad Dubey's list of the Fab 4 stocks of the day, and then we'll talk about some of the others. Sharad, good afternoon.
Good afternoon, Neeraj. The first stock is Raymond. It's a no-brainer. The company has announced that it will spin its branded lifestyle business into a new listed company. The company also announced a debt reduction plan. Now, in the lifestyle business, branded textiles, branded apparel, and the garment will be included. These segments contribute almost 81% of the total revenues as per FY19's annual report. Up next, we see in IGL, Indraprastha Gas, which is up almost 6% after it came out with a strong quarterly numbers, and also it reported a double-digit volume growth for the 14th consecutive quarter. Even the margins increased by 150 basis points to 23.2%, and the revenues rose by 19%. Up next, we see is RBL Bank, which is up almost 5.5% as we see fresh longs with a high open interest of almost 23% in the volumes trading at almost 2 times its 10-day average. And the last stock of the day is HDFC AMC, which is up almost 6% after it has been added into MSCI Global Standard Index. The estimation of the inflow is almost $132 million. And mind you, these changes will be effective from the close of November 26. Back to you.
All right, Sharad, thanks very much for that. So that's the Fab 4 stocks for the afternoon. A few other moving parts for the market. I think Raymond is up about 20%. We've got Bombay Dyeing, which is up about 7-odd percent. Sterlite Tech is up about 7%. DLF is the other one, which is at 205 now. And the last few days for DLF have been actually not bad at all. 1 month, the stock's up about 42%. Sacchitanand, a quick take on DLF?
Well, I think the major resistance zone of around 200, that particular level has been breached, and I think the next resistance for the stock is placed somewhere close to 215, 218 zone. So I think in case if someone wants to really ride this particular move, they should place the stop losses at 200. This is the first time after a very long time when the stock is showing some signs of strength. So ideally, with 1 day of data, it will be very difficult to create any fresh longs. But definitely, if someone wants to hold it, 200 is the right level wherein the stop loss should be placed. And in case if we see a follow-through momentum in the coming week, then I think for 215, 220 is the cluster wherein the stock should be reviewed.
I want to mark 2 stocks. HDFC AMC, Sharad spoke about. That one is moving up and it's trading at life highs. Reliance Nippon Asset Management, on the other hand, has corrected. It's now at about 320. So the last few days, it's actually come off from those 360 odd levels. And quite interesting, the movement in the last few days. There was a bit of a valuation catch-up happening there, but somehow that seems to have cooled off. Today is the MSCI trigger for HDFC AMC, of course. The other 2 stocks which are very active, and Vishvesh, I want to know which is the stronger chart out of the 2. Yes Bank and Indiabulls Housing Finance. If I mean, both of them could be weak, but between the 2.
See, Neeraj, just for the record, I would like to say that from the current level, the kind of the setup that both the stocks are having, my sense is that Yes Bank may have done its course, but Indiabulls can rise another 15-20% from the current level. As long as the stock is not going below 230 level, I believe that this stock may run up higher against the market expectations. And I mean, just you have to keep one thing in mind: the stock has fallen a lot, and after a consolidation around 230, 220, the stock has today moved higher. So if I had to pick a one stock out of this 2, probably I'll pick up Indiabulls. But just to give you one statistics, positive correlation of Indiabulls Housing, RBL Bank, and Yes Bank. And if you see these days, at least from the last couple of months, all these 3 stocks moved in tandem, and at least in some way, percentage wise similar moves. My sense is that out of these 3, if you ask me the choice, I would go with RBL Bank and not even with the Indiabulls. But among the Yes Bank and Indiabulls Housing, I think Indiabulls Housing.
Okay. That's Vishvesh's view on a couple of these beaten down stocks. Just want to address Sun Pharma as well. That's sitting with cuts of right now 4%. Remember, the earnings came out yesterday. We did see a bit of up move, but after the commentary that's come in, Sun Pharma has also given up those gains at 423. Sacchitanand, would you take a bet now at current levels, considering the sharp fall that we've seen in today's trade?
Well, a very difficult situation. In fact, what we are observing here is a support which is around 420, and I think that particular support is still valid. But if you look at the daily charts, the stock has really not managed to sustain above its 200-day exponential moving average of around 435 for 6 consecutive days. And if you look at the RSI as well, it is showing a negative divergence. So I think ideally conditional sell should be deployed in case if the stock now slips below say 419, then I would be really interested in shorting this counter. On the higher side, the stop loss should be placed at around 425 once the condition is met, and after that I think the next cluster is placed somewhere close to 400. So I don't think there's any particular major support between 420 to 400. So I think ideally one should wait for this 420 level to be breached, and I think 419 would be a good level wherein fresh shorts can be considered.
Bharti Infratel too, now after seeing a decent run up over the last few trading sessions, today has seen a little bit of pressure. So about 3.8% lower for Bharti Infratel at 220. Vishvesh, do you track Bharti Infratel, and would you initiate any short positions from here?
Well, I think Bharti Infratel for the short, if you had to initiate, I think the Vena stop loss should be around 230. And the way the stock has come from 170 to 230, I think this is definitely a sign of a resumption of a downtrend again. So today's high around 230 should be the stop loss. Should be looking at least 200 level on the downside. Good pick in my view.
Okay. Well, we'll get in Deepak Shenoy in just moments from now as well. Mind you, behind Raymond, which is up 20%, we also have upticks in Bombay Dyeing, which is up about 6.6%. So do watch out for that one. And then while there are some result reactions, as we've already highlighted in likes of IGL, etc., there is a serious uptick in Sterlite Tech today. The rumor mills have it about some bit of safeguard duties. We don't have any confirmations thereof, but that's the reason why the stock is active in the session today. 3.4 million shares traded. Deepak Shenoy of Capitalmind joins us right now on the show with his thoughts. Deepak, good having you. Thanks so much for joining in. At the outset, Deepak, just wondering, because you guys look at so many results and the historical data, etc., anything in the last few days that has really surprised you positively? Because there's a clutch of them which have done that, but something that stood out for you?
I think, Neeraj, some of these DTA adjustments or, the deferred tax adjustments that have happened because of the lower tax code usually, in my mind, would have resulted in a cut in profits for a lot of companies who had deferred taxes. But in other cases where their deferred taxes have liabilities and therefore the liabilities have to be revalued today, those companies have actually shown a much higher result. So you see a Torrent Power, I think even a Gujarat Gas, and perhaps an alkyl amines. And by the way, the alkyl amines is in our portfolio, so we're biased. So there has actually been a significant jump in profits because of this. So that's an interesting point, because it really means that the taxation impact is actually not only positive from the perspective of being a lower tax, but also from the perspective of lower deferred tax liability because of the change of the tax rate. And this has actually positively surprised us in a couple of places. What I have also seen is that certain kind of results of HDFC, AMC, again we're biased because we own it. AMC actually had a very stellar set of results, and some part of that results is because of much lower commissions that they've paid, because the structure of commissions has moved away from the fund to from the AMC to the fund. So it's a very interesting play here, and a lot of such companies or such small accounting changes that have happened in the last year due to regulatory reasons, sometimes because of tax, some because of SEBI reporting or changing norms. I think this has had a very positive impact on certain balance sheets. The negative surprises, of course, there are lots. You can't even start to count on where, but the biggest, I think, positive to see at least is we're seeing a lot of NPAs around real estate and developer loans start to come to light. The big one, which is DHFL, will come in the next quarter. So I think it's positive in the sense only that these people, the banks at least, have managed to tell DHFL to have paid a certain commercial paper on July 5th so that it wouldn't be an NPA in the July to September quarter, but it would become an NPA later. So to that extent, the positive is that NPA hasn't appeared on bank books, but I think that that NPA will appear. So it's a positive in the sense that the big negative is coming in 3 months.
What did you make of Bharat Forge numbers, Deepak?
I haven't seen Bharat Forge numbers, to be honest. I haven't been able to see them today. I don't have a comment now.
No mind, we'll get the management in moments from now to prepare and try and talk about that as well. A quick update. We're just waiting for the management to come in, Deepak. A quick update on Raymond and the restructuring that they've announced and the fundraising. What do you make of that?
So I think this was, a promoter entity that had sold one piece of property and then therefore got cash, and this would then be now used to infuse funds back into the company, and a separation of the units between real estate and the consumer business or the textile business. And I think it's a positive in the sense you don't want both mixed up. It's a good thing that you get shares of both entities. It also allows, we haven't had the best of corporate governance structures here in the past, and continuingly also we've had a promoter that has a lot of his personal lifestyle financed by the company, and without actually hiding it. It's openly known that this is done. So this is not, it's not the most adequate of corporate governance structures that I want to work with, but it might be interesting if there is a turning of a new leaf. However, I think we should give it a few more quarters of reporting, see how the accounting is done when demergers are done, because that is also where corporate governance issues can crop up. So I'm a little wary of this particular specific restructuring, though on paper it looks like a fabulous deal, and I hope at least that shareholders will benefit from it.
Okay, that's the word coming in on Raymond, which is locked in upper circuit with gains of 20% on back of that restructuring news. But on that note, let's go across to Yatin Mota to find out what the dealing rooms are saying on this Friday afternoon. Hi Yatin, good afternoon.
Good afternoon, Navneet. And if you look at the entire, small and mid-tier private sector banking, that is quite active. The likes of Yes Bank, RBL, all of them are moving higher. Dealers, are indicating at this point in time that, there is a lot of short covering which is seen in all of these stocks, especially the likes of RBL on huge volumes, mind you, almost 2 crore shares or traded as far as RBL Bank is concerned for trade today, 5% up for that one. As far as Indigo is concerned, this is one stock. Based on the FNO trends, dealers are recommending a buy today, sell tomorrow kind of strategy. 2.5% up for Indigo at this point in time, 40 rupees up, for this one. And finally, Polycab is the other one wherein HNIs are, aggressive buyers in trade today.
Right, Yatin, thanks very much for that. Bharat Forge reported second quarter numbers today, but the bigger factor is that they expect the second half of FY20 to be lower than the first one. Let's discuss this and the quarter gone by with Baba Kalyani. He's the chairman of Bharat Forge. Mr. Kalyani, thanks very much for taking out the time, and a very good afternoon to you. The quarter gone by has been disappointing. It's been a tough period nonetheless. The question is what lies ahead and how do you aim to tackle that?
Well, I think what lies ahead is pretty much known to the market. There's a big drop in the CV business in this country. There's a huge pile-up of stocks, and then there is a change to Euro 6 on April 1. So I think the picture is very clear. We don't expect to see very high numbers on the CV side of the business in the third and the fourth quarter. And I think once all this pain of inventory, etc., is over, then I think things will start to getting back to normalcy. In the meantime, I think on the pass car side, we are doing well. We are gaining market share. We are gaining new customers. So that's good news. We are also taking the time to restructure our costs and do a lot more new product development. Hopefully, we'll see a better sustainable future for us as we come out of this down cycle.
All right. So when, it's obviously very difficult to pinpoint when things could start turning for the better, but we've already started seeing, some recovery in volumes from some of the bigger auto majors. Do you feel that second half of the year would be any different from the first half? Because the first half has been particularly tough.
I think the second half will also be equally tough, but I expect the pass car segment to do much better than the first half. But the CV segment, I'm not so sure because I still see a lot of pain ahead up to March end.
Mr. Kalyani, good afternoon. You've already highlighted with regard to your guidance for second half, which could be even lower than the first half, and particularly for the CV segment, ahead of the implementation of BS6 on April 1st, do you expect any sort of pre-buying to come in? And when exactly do you see the revival? When will this pain last?
If there was a pre-buy, it should have already started happening because pre-buy normally would have happened in the second and third quarter. So we don't see any pre-buy. Matter of fact, if you look at the numbers for the second quarter, the numbers are somewhere close to 50,000 mark compared to 120,000 same time last year. So it's pretty much subdued demand that's coming from this segment. And for us, it's the OEM demand that drives our business. We are in a B2B business, and that's the demand that drives us. And honestly, I think we have to wait till March end to start seeing some change or some improvements.
You've also highlighted that you will be using this current environment to cut down more and more on your cost because, of course, the demand is not picking up. Can we then expect your margins to be in the same territory of 15 to 16%, or there can be some bit of downtick in the second half, since you've stated that second half will be weaker than the first one?
Yeah, I think it will be in the same region. I don't think the margins will get dramatically impacted. We are taking a lot of measures to cut our costs down. We have already done a lot, and we will still do a lot more. We are also doing a lot of restructuring in terms of production. We have 2 or 3 production sites, so we are able to restructure this. So I think that will show its impact. But the main factor for our business, for any B2B business, is demand. The demand has to come back. And I think we have to wait, hopefully, till the beginning of the next fiscal to start seeing some demand coming back.
One more question from my end. Your shareholders would be interested in this since the company has 1,700 crore of cash on its books. What is the capital allocation policy that you will be following? Are there any plans in the near future to deploy cash?
Well, we have stopped all capex, so we don't have any capex going on. We are focusing more on cutting down costs. Right now, we are happy that we have a large cash reserve with us because I think that's what is going to see companies like us through difficult times. So right now we have not had a strategy of what we're going to do with this cash, but very clear we're going to conserve cash and make our balance sheet stronger.
Mr. Kalyani, good afternoon. The genesis of this pain point largely global or a mix of both global and local equally split, sir?
I think it's largely local, less global. Global was a known factor. Local is a surprise. So I would say largely local.
And the non-auto segment, Mr. Kalyani, what do you expect? Because I see a clutch of reports which say that over the medium term, aerospace, defense, etc., will all hold you in good stead. You've spoken at length about autos, sir. What about the non-auto business?
I think the non-auto business, we have a couple of verticals that we are working very hard in. And yes, I think they should see us in the medium term in good stead. But, areas like defense, aerospace are areas which take a long time to mature. I think we have now getting to that maturity curve. Hopefully, we should see some traction coming in the next. We have a reasonable business even now in this sector, and we should see even a better traction next year in this sector.
Okay, I have one final question, and just moving to geographies as well. There's a lot of talk because of Brexit about how Indian component suppliers or Indian suppliers will have an issue going ahead. Europe at large, and you would have some exposure there, sizable one at that. How do you expect that geography to do? Would it weaken in the coming quarters? And due to Brexit, could there be some other challenges as well?
Well, I honestly don't see any issues as far as our business is concerned with Brexit. We have very little that we supply into the UK, and I don't think there is a problem for us to supply into the UK. And as far as Europe is concerned, I don't see any issues that are coming, at least from the Brexit point of view.
Okay. Well, but we wish that things turn better sooner rather than later, Mr. Kalyani. Thank you so much for taking the time out. Thank you. Thank you for speaking to us.
Yeah, bye.
That's Mr. Baba Kalyani. By the way, the index has just completely come off. Navneet just highlighted that 115 points down for the Nifty now, 363 for the Sensex, and it's also brought down the Nifty Bank. Look at the components. Bharti Infratel is down 5%. Sun Pharma is down a full 4%. I think the bull calls might just be getting a bit unwound. There are some names which are holding out the banking space, but a lot of others have just completely come off. Sacchitanand, come in here. Maybe people could have been bullish, but now, even if you were bullish, would you take your bets off the table? Worse yet, would you initiate a fresh shot at the current levels?
In fact, the way Neeraj, in fact, the way we talked about the pattern, the entire directional play will only set in once 11,850 is breached or 12,000 is breached on the higher side. So I think it's better not to place any fresh bets on the indices. Probably we may see the Nifty, resting within this particular range in the last few minutes as well. So I don't see a breakdown or a breakout, maturing in this phase. But in case 11,850 is breached on the lower side, I think that will be a good time wherein some fresh shorts can be deployed, but not as of now.
Okay, not as of now when it comes to creating fresh shorts, but 10 minutes to go for markets to shut shop. And today is Friday, so let's get you some closing strategies for Monday's session. Vishvesh, any top strategy, either BTST or any STBT for Monday's session?
I think Bank Nifty both can be shorted. Along with that, if you have to short, I would recommend M&M Finance short. One can short Oro Pharma at the current level, and even the BPCL can be short at the current level. See, what has happened in the today's session is that very smartly the market moved against the kind of the news flow that we had, and that was exactly what the liquidation needed for the people who were carrying some sort of a long position. Once that is done on a higher level, we have noticed a huge shorts been created. I don't think that we're going to cross this high for some time now, and maybe it may be a little bold to say, but probably we have a a high for the series as well. My sense is that Nifty can go down from current level about 200 point, and Bank Nifty can come easily 500 from the current level. So today's high can be stop loss, and shorting can be done on the stocks as well as the indices.
Okay, Sacchitanand, what about you? Your top closing strategy would be?
Well, Bata is something which is looking further weak. In fact, since last two trading sessions, it managed to hold its closing above the 1700 mark. And if you look at the entire structure, on the weekly scale, we have a fresh breakdown on the RSI, and if you look at the price action as well, it is complementing the setup. So probably, fresh shorts can be deployed on Bata. On the higher side, 15, 18, 16, 17, 18 should be the stop loss for the trade. And on the lower side, I'm expecting that the swing low around 1650, that particular level might be revisited. So close to around 50, 55 points of a decline, and stop loss on the higher side should be merely around 18 points.
Okay, that's a sell call on Bata, which is sitting at day's low. Deepak, Sun Pharma, that's down 4%. The numbers came in yesterday. Now, we did see some bit of outperformance when it came to Cipla's number. Overall, if you've analyzed the numbers from these large pharma companies, what have you made out? Is there any investment opportunity that you foresee here?
We've been investing in pharma for a while, and we kind of gave up a couple of quarters back. But to be fair, I think we might be bottoming out either now or maybe a quarter or so from now. I believe one of the problems to this entire thing has been, the approach on the FDA front and a lack of development on almost all companies in terms of being able to revive. And I hope that in the next 2 or 3 quarters there will be some action in that. So overall, while the results actually have a mixed bag, and last year also the results were really lousy. Sun Pharma had a big one-time hit as well, so the PAT number growth looks good. But right now I don't think headwinds are away, are behind them. I don't think they will. I personally don't feel that right now is the right time to enter these stocks. Not for anything else, but because the process of cleanup is still on. It will still take some time until we get some FDA approvals back, like in a little bit like the way Divi's did a little while back. That cleanup hasn't happened across the industry, and when it does, I think that's the time pharma should come back. Otherwise, it's going to be a select pick. Very few names out there that can have actually demonstrated some strength, both in price and in performance over the last 3 quarters. So I'll still wait a couple of quarters before getting in.
Deepak, you heard the commentary from Baba Kalyani. Even if you haven't looked at the numbers, did the commentary tell you that it shouldn't be a good idea to get into these names right now?
Yeah, I think if the prices hit lows, you should, because the whole auto cycle has lasted about one and a half years now. I don't think it'll last. It's going to last a lot longer than this. Probably 2 years at the outset. But if you're thinking of the 10-year cycle, then this is a good time to get into some of these, some of the better stocks in the industry. And now we've seen extremely interesting results. Today, I think there was a small cap GNA Axons. Again, we own that as a disclosure with extremely good PAT numbers. Though pre-tax numbers were just flat, the PAT numbers were up quite significantly because of the lower tax rates. And I believe even a flat number at this stage sounded like positive because commercial Videsha supply only to commercial vehicles. So I think at least from here there should be some optimism in terms of numbers coming in. But think of March as the earliest time you could probably see a recovery in commercial in India. And if that's the bet cycle you want to do, I think you would say wait about 60% on commercial vehicle manufacturers, OEMs, and about 40% on the ancillaries like Bharat Forge or a bunch of the others. So that might be a good commercial vehicle play for the longer term.
Okay, we'll let you go on that note, Deepak. Thanks very much for joining us this afternoon. A quick word, Sacchitanand, on Godrej Consumer Products. Now, that stock has been active post its numbers. What would you do as a trade?
Well, the uptrend has been very much intact. If you look at the recent swing that was established somewhere close to 708 zone, I think that will be the critical mark. On the higher side, the way we have seen a breakout on the weekly scale, somewhere close to 700 levels. I think that particular breakout clearly suggested a target of around 750, 780 kind of a zone. So I think one should remain long in this particular counter so far as 705 is not reached on the lower side. So I think this particular move can unfold in a very slower, gradual manner. But I think 700 support is holding strong, and I think that stop loss should be placed around 705. And on the higher side, the review zone rests somewhere close to 750, 765.
Okay, gentlemen, stay on. Sacchitanand and Vishvesh, we'll just take in closing thoughts from you. But here's how, let's start wrapping up the markets. And it's not a pretty sight at close. We didn't quite anticipate this in the morning. Everyone was rejoicing the fact that the outlook cut didn't quite result in any big reaction. Well, the banks have still held out, but the indices, by and large, have corrected and a lot of stocks have come off. The mid caps and the small caps should also come up on your screen. They were not doing as bad as the benchmark indices have, but have come off from the highs of the day. Let me talk about the large caps first and show you what's moving and what's not. So, select banks have stayed okay. Yes Bank, IndusInd, ICICI and Kotak. Top 4 names are actually all banking names. Eicher post numbers up about 1%. Z marginally higher, but aside of that, not too many gainers worth talking about. Look at the losers and a clutch of names falling. So Bharti Infra 4.5, Sun Pharma after the numbers yesterday down 4.5, GAIL the numbers today down 4.5, UPL 2 days on a trot has had a deep gash. Commodity stocks selectively like Vedanta etc. and ONGC have come off, and IT too has taken a bit of a backseat. The belief again was that maybe IT will prove to be the saving grace today. TCS shows that that's not necessarily the case. And then you have HUL, Cipla, Britannia. So clutch of names have come off in the session today without any specific sector taking a lion's share of the cut. So what about the broader end of the spectrum, Navneet?
Well, Nilesh, a lot of profit booking definitely came in once the market came off. A lot of stocks which were moving higher in the last 5 to 6 days succumbed to selling pressure. So let me start off with a couple of gainers first. And of course, HDFC AMC is something which we've been talking about. It got added into MSCI index, 6% higher for this one. Raymond is the other one which was locked in upper circuit with gains of 20% after announcing that restructuring news where they would be demerging their core business, that's the garment business, into lifestyle, 20% higher there. And also Apex Frozen Food and Avanti Feed. So that theme continued even today. All these shrimp players, be it Waterbase, Avanti, Apex, all of them. In fact, 2 of them have been trading at their 52-week high. DLF is the other one which reacted positively to the numbers today. The deleveraging news has been giving that fillip to this counter. 203 is where it's closing. IGL came out with good set of numbers this time around, and that too is trading around its life high levels. Voltas is the other one, even in a weak market like today's, and this one managed to rally 4% up here. On the losing side, Bharat Forge, extremely weak set of numbers, and candid commentary also coming from the management stating that second half will be lower than the first half. HPCL numbers did not look great, and selling pressure continued even for HP or be it BPCL. Berger Paints, an outperformer of last 1 to 2 months, has been seeing some profit booking, and also something like New India Assurance. Now these stocks were moving higher, and they've now started to witness some bit of selling. Motherson Sumi is the other one which was moving high in the recent past. This one too came under selling pressure, closing at day's low with cuts of 4%.
All right, so that's the shape of the market, and that's the color of the index as it closes for trade this afternoon. So down about almost 1%. The Nifty Bank has managed to stay afloat. 122 points higher for the Nifty Bank, Sensex closing under by closer to 1% as well. Coming to the weekly performance, this is the end of the week. We step into a truncated week next week, where Tuesday is a holiday, but ahead of that, a flat move on the index. Remember, this is coming on the back of the 2.8% move that we saw last week. So it's not bad. We've still got a positive close. Bharti Infratel is up about 8% this week. ICICI Bank, on the anticipation of the run-up and the build-up towards the MSCI weighted change, moved up. JSW Steel, HDFC continued to do well. And Yes Bank and IndusInd Bank too contributed. Amongst the losers, Titan fell on the back of very disappointing numbers, and the stock was down 11%. Z, Maruti, Hindustan Unilever, all of them looked weak this week.
All right, so a lot of earnings reaction is something which we witnessed, but looking at the broader markets as well, today, of course, the breadth was on the weaker side considering the sell-off that we saw. So the Nifty Mid-Cap Index is closing with cuts of 1% for the week. Your gainers include the likes of Indiabulls Ventures, which was up 27%, Edelweiss Financial up 19%, Max Financial came out with its earnings this week, and this one is trading around its 52-week high level. JSPL had its other news as well besides the numbers, so that one rallied about 17%. PNB, IGL reacting to numbers today. SRF has been doing good. On the losing side, you had counters like Engineers India down 13%, Apollo Tyres, Reliance Nippon, which had gone up to levels of 360, came off, Glenmark, Mangalore Refinery, and something like Future Consumer. So all these stocks, M&M too, featuring the M&M Financial, that is down 7.5%.
This one particularly had 2 big news working in its favor and did well. JSPL, so watch out for that one. Let's get in quick closing comments from both our technical experts then. What to watch out for the week that's coming up. Sacchitanand, let's start off with you.
Well, clearly, the closing is very much in line with expectation. In fact, we have a spinning top kind of formation. Again, it is an indication that whatever needs to happen, I think, will happen outside the range. So the bounds are very well defined. 12,000 remains as a resistance. In case if we manage to sustain above that, then probably we may see a very strong directional momentum again getting back in the market on the positive side. But on the contrary, 11,850, if that particular level is breached, then probably the lower side is open right up to 11,600. So it will be a very interesting play. In fact, if you look at the historical evidence as well, on the weekly scale, Nifty reached the levels around 12,000 in the past 3, and there are 3 instances wherein a weekly close has not been established about 12,000. So I think it's a very tricky zone. So that's why it is better to be a level-based trader in case if 12,000 is breached in the coming week, and then probably the headroom may extend right up to say 12,200. But in case if the indices fail this time, I think the lower side can open up right up to 11,600.
Yeah, that elusive 12,000 mark that we've trying to surmount since quite a few occasions in the past. But Vishvesh, what's your closing comment?
If you notice today's data, the call side has already about a 74 lakh shares in a Nifty, and almost the put call ratio has come down by 20 basis points. And not to say that 12,000 call open interest has been increased a lot. My sense is that we have got some high for that some time, because I don't think that market has got a strength. All the large cap has already run its course, and right now the beaten down names are going higher. On the other side, if you see the global indices also, I think they may need to take some breather, because they also had a rally which we were anticipating. In coming days, I think market has more chances to stay at the current level or go down. I see a limited upside from the current level. And if you notice today, overall options data, it is clearly indicating a huge amount of call writing at a higher level. I think for some time, today's high may not be protected. And as Sacchitanand pointed out, technically today's formation on a chart, whether it is daily or a weekly chart, both are looking not so great. And I think that in a shorter term, it is a good idea to remain on a cautious side, or maybe if you're an aggressive, you can short also.
All right, we leave it at that, gentlemen. Sacchitanand as well as Vishvesh, thank you very much for joining us this afternoon. And on that note, it's a goodbye from Navneet, Neeraj, myself and the entire team that's put the show together. Thank you so much for watching. Have a great weekend.